for $200. That is at its premium. That is Jordan 4's premium, right? I mean, with our sell position, you put your sell over here, TP relative over here, smashed. Welcome back to another YouTube video, Flare Fix, where we make trading very simple. If you're new here, please make sure to click the subscribe button, turn on the post notifications. As you guys can see by the title, today we'll be talking about premium and discount. This is lesson 3, guys, so make sure to watch lesson 1, 2 and 3. I'll probably put the playlist on top over there. Just make sure to watch it over and over, guys, because this video is the most important one. We'll be talking about premium and discount, where to sell, where to buy. If you have this in your arsenal, guys, it is genuinely such a game changer. So make sure to click the subscribe button if you haven't subscribed. If you already have, welcome to the family. It's another video, guys. But nonetheless, let's get into it. All right, guys, so this is premium and discount. What I'm gonna do is explain the fundamentals, talking about the premium, talking about the discount and how they're working together, and live market example, because I know you guys love that, right? So to start off, guys, premium and discount is pretty simple, right? When something's premium, it's very expensive, and something that is discount, it is very cheap, right? And then we have the 50%, or what we like to call the equilibrium, guys. This is such an important thing to know because it's going to help you so much, especially on the chart, right? So now let's say we are on a bullish market run, right? What you want to be doing is buying something while it's discounted, and then when you're in a bearish market, you want to sell something when it's at its premium, right? So Mr. Flare, how does this work? Please explain it to me as simple as day, so I can understand and trade it when I see it on the chart, right? So now let's say we're on a bullish market, right? And a low has been made and a high has been made, right? And then price comes all the way to the discounted price. This is where you want to be buying, guys, over here, right? This is your buy entry or your buy signal setup, right? So now when something is discounted, guys, it's at its cheapest. This is what I always tell traders. You need to look at it as an investor, guys. Even shoes, guys, even cars, they also do this. Like with shoes, let's say maybe for example, like maybe Jordan 4s come out and they sell maybe for $200. That is at its premium. That is Jordan 4's premium, right? And then as you wait for price to get discounted, as time goes on, maybe it drops to $150. Then you can buy the shoe, and then it climbs all the way to the top, right? It even works the same with cars, guys. Like the Mark 8 when it came out, the Golf GTI. When it comes out, guys, it is very expensive. It makes no sense to be buying something while it's at its premium. You need to buy something when it's discounted. And likewise, guys, if you have something that is very valuable, if it is at its highest point or when it's the most expensive, it's the time you need to sell it, right? And this is how it works on the charts, right? Even for a bearish market scenario, once price makes a high, makes a low, and we've identified the high and the low, we draw out this tool that we use called the Gantt box, which I will show you just now, so watch till the end, right? So this basically highlights the 50%, and then it shows you where the premium and the discount is. As soon as price goes above the premium or the equilibrium and taps into the premium, this is where you sell. So your entry signal will be here, especially if you were trading a bearish market and wanted to use the premium and discount. So that is your entry, right? Clean cut finish. Now the number one rule is on an uptrend, you need to buy below the 50%, or you need to buy in the discount, and then on the downtrend you need to sell above the 50%. So the red line is the 50%, even this side the red line is the 50%. If you're on an uptrend, you need to be buying below it, and if you're on an uptrend, you need to be buying above the 50%, guys. I feel like I've explained it to its core, guys. Now it's going over to the charts and explaining for you guys to see in a much more cleaner and much more simpler way. All right, guys, so this is gold on the 4-hour time frame. So I'll explain an uptrend and how you can spot these things. This is why I'm saying the previous 2 episodes are so important, because you're going to be tying everything all together into this one trade, right? So now this is on an uptrend, and remember what I said in the previous episodes, guys. It's highlighting the obvious lows and the obvious highs. So we'll use gold's current market structure right now to actually explain what I'm seeing, right? So okay, cool, we have a low over here, we have a high over here, we have a low over here, we have a high over here, we have a low, we have a high, and then we have a low. Now, since we've identified the lows and the highs, we can come in with our market structure mapping, and we can see that, okay, cool, there's a break of structure over here. Bingo bango, price is moving higher and higher. And then we further got another break of structure over here. Price is going higher and higher. Right? Bingo bango. So now, since you understand that these breaks of structure, you need to understand that breaks of structure indicate trend continuation. So now, since we understand that this indicates trend continuation, you pull out this tool that we have over here. It is called the Gantt box. You'll find it relatively over here on the trading view chart. You come on over here and then you zoom all the way to the downside, and then it's called this, the Gantt box, guys. You select this, right? And then these are the settings I have for this guy, right? My style is 0, 0.5 and a 1, and then my background is switched on just a little bit just to show the things, and then this is everything that I have, right? So this is what my Gantt box, right? So now, like I said when I showed you the premium and discount illustration, you come in with your Gantt box from the bottom all the way to the top, right? This indicates the 50%, this indicates 100%, this indicates 0%. Price push all the way to the top, making a high, further coming down into the discount, hence why we got this movement all the way to the top, right? Now, this is not always fairy tale and rainbows, because check this out. You can come in over here and still highlight the low and the high, and price doesn't come into your discounted zone and it moves out of your favor. It is okay, guys. The markets are not perfect, but you need to understand and adapt, right? So now, here's another example. We have a break of structure, we have a low, we have a high. We pull out the Gantt box, which shows us the premium and discount. We select the low, we push it all the way to the top, selecting the high, right? Making our gray zone the premium and our yellow zone the discount, and this line here the equilibrium, or the 50%. Now, what did I say? If we're on an uptrend, guys, you want to be buying where? In the discount, right? Obviously, when you go over to the lower time frames, it makes so much more sense to get entries relatively over here, and then you hold it all the way to the top. And that's how premium and discount works, guys, especially on our uptrend, guys. This is why it's so important to understand market structure. Firstly, understand where the highs and lows. Secondly, then you can start implementing things like premium and discount, so you can understand how you can leverage the market and trade it on a daily basis, guys. And that's how I operate using the Gantt box and using premium and discount. It's such a clutch implement and a clutch system, and I would recommend anybody to use it. So now let's find maybe a downtrend example so we can both all explain it. All right. So this is GBP USD on the 4-hour time frame, guys. So I'll be explaining the downtrend and how you can execute using the premium and discount and the Gantt box, right? So like the first lesson and the second lesson, guys, is identifying market structure. Market structure mapping is also such an important thing, so we'll do it together so we can all understand, right? So bingo bango, we'll use this downtrend that we can see over here, right? Clean cut finish. Okay, we got a high over here, we got a low over here, right? This high made this low and broke this low over here, so we got a what? We can classify this as a change of character relatively over here, right? Bingo bango. So when this happens, you pull out your Gantt box so you can see how far price is going to retrace up, because you're looking to sell in the premium because we want a downtrend. Price comes in, this is the premium, this is relatively your entry, bingo bango. Stop loss just above there, TP gets hit, right? You get what I mean? Now, that's your first entry. Bingo bango, you caught it, it was clean. Price goes down and breaks structure. Price breaks structure over here, right? And then it makes this low over here. And then this high is the new prevalent high. You pull out your Gantt box again from top to bottom, and what does price do? It comes into the premium, like we explained. We come in with our sell position. You put your sell over here, TP relative over here, smashed, right? Then we move over, the same thing that I'm doing, guys. Can you see what I'm doing? And you can imagine this is on the 4-hour time frame. Now imagine you're in the 1-hour time frame. These are sniper entries, right? Okay, cool. A low has been made. High pushes, price pushes up, makes this high over here, right? This is the new low. This is the new break of structure that we have over here. You pull out your Gantt box once again from bottom to top. What does price do? It taps into the zone over here. This is your entry relative over here. Stop loss just above. TP gets hit eventually, right? Now, here's another instance, right? This is beautiful because it's showing you what price actually does when you're not, or when you are paying attention. Then price consolidates for a while, right? Now price consolidates for a few. There's no new high, there's no new made low. Then price pushes all the way to the downside, making this the new low, and then this the new high. You pull up with your Gantt box once again, guys. Relative over here, you sell in the premium like that, and then price pushes all the way to the downside. Clean cut finish, guys. Like, that is how it works, and that is the name of the game, especially when you're trading premium and discount, guys. So now, since you understand market structure mapping, you understand how to identify trends, and you understand premium and discount, in the next video I'll be explaining how and where to execute and where to get in with your buys, guys. This is such a nice series, especially for beginners, and I really believe that you guys should try and do your best to rewatch the first episode, the second episode, the third episode at least 3 times, guys. Download these videos, you watch them when you're eating, you watch them when you're studying. Like, it helps so much, especially when you know market structure, guys. This has changed my trading, and the main reason I'm making this, guys, as simple as it is, you can find market structure video anywhere, guys, but the fact that you're watching my video, you are the chosen one. Trust me, bro. Like, this has changed my trading. I was a price action trader and I converted into SMC, guys, and there's so much of a big difference between trading price action and SMC. And the main reason I'm saying this, because with price action, you're solely trading off of price patterns, your head and shoulders. Now with SMC, it's a more systematic approach. You can understand where you need to execute, and there's reasoning behind a lot of your trades you take. With price action, it's more so impulse and correction, and you can take a lot of the principles from price action into SMC. Don't get me wrong, I just personally feel like SMC, for the type of trader and person I am, right, it's more systematic. It's easier to really play around, especially with numbers and your KPIs, guys. And it's important to really understand what works for you and really buckle down and go 10 times harder on the things that are making you money than things that are sabotaging you. Hence why I'm talking about market structure and I'm making these types of videos, because I understand someone's watching out there who really wants to elevate and change and really polish up their skill, and this is the first step towards it, guys. Really implement this in your trading and you'll see a difference. Practice makes perfect. Get the backtesting app, guys. It's already relatively over here, right? Pay for it. Replay tool, bar replay. Test if my analogy is working. Test it many times, guys. And one thing I can definitely tell you, right, this is solely my strategy. Like with me, I've noticed that certain pairs retrace to a certain level, right? So if I can pull out actually the currency one over here, right, and I come in and go to currency, this was gonna be my entry actually. Hopefully it just works with me for now. Yes, so this is the currency Fibonacci retracement tool, right? This is going to be explained in the next video how to use it exactly the same way I do. This was going to be my exact entry based off of the currency pairs that I do trade. This was going to be my TP1, this is going to be my TP2, a relatively clean 1:3, guys. Can you see what I'm saying? It's like when you understand the market structure and you understand what you're looking for, then implementing things like a certain specific levels where to execute off of, that's what I'm saying. SMC is so much better than pure price action, mainly because it has a systematic way of approaching and it's more methodical and more logical to really trade SMC, guys. That's personally my opinion. I know a lot of you guys are gonna roast me in the comments, but that's just my personal opinion, guys. But yeah, from my side, please make sure to hit the subscribe button, turn on the post notifications, guys. That's very important because I'm gonna be posting more videos like this. Like I said, this year it's more quality more than quantity, guys. So make sure to subscribe. We are relatively close to 1,000 guys subscribers. I feel like once this video is up, you watching this, we're probably relatively close. So please make sure to hit the subscribe button. But nonetheless, guys, from my side, glad to have you here. Your mentor signing out.